Greetings for the day. Myself, Professor Dhruti Jani, Assistant Professor at New LG Commerce College. I welcome you all in the second unit of Corporate Accounting of Semester 3. Name of the unit is Valuation of Shares. Let us first understand meaning of valuation of shares. Valuation of share means the ascertainment of the value of shares which is independent of the price of shares quoted in the share market. Share valuation is done based on quantitative techniques and share value will vary depending on the market demand and supply. Shares of all public companies are not quoted on stock exchanges. Shares of these public companies which do not fulfill the listing requirements or which do not apply to the stock exchanges for listing their shares are not quoted on the stock exchange. Hence, the shares of such public companies have to be valued in accordance with some accepted principles. With reference to the private companies whose shares are not publicly traded, valuation of shares is really important and challenging. Let us learn now need or purpose for valuation of shares. It is required for estate duty and wealth tax purposes. Next, purchasing shares for control, amalgamation and absorption schemes, unquoted shares of private or public companies are bought and sold, security purpose, implementation of ESOP that is Employee Stock Ownership Plan, compensation made to a company when the said company is being nationalized, and lastly, conversion of one class of share to another class. Let us study now assumptions of share valuation. While valuing the shares, an accountant is dependent on the following assumptions. First one, sufficient number of buyers and sellers of the share are available in the market. Second one, the seller does not sell his shares due to his urgent need. And lastly, the purchaser of the shares does not like to pay a higher price in comparison with the reasonable price or market price of the shares. Let us next study factors affecting valuation of shares. Majorly, two factors are there, internal and external. Let us first study internal factors. Net worth of assets, earning capacity of assets, rate of dividend and its stability, EPS that is earning per share, efficiency of management, and lastly, nature of business. Let us study now external factors. Economic condition of a country, political and social condition, international economic condition, international political condition, demand and supply of shares, and lastly, economic policy of the government. Let us study now types of values of share. Majorly 5 types are there. Let us understand them. Book value, first one, that is face value of shares shown in balance sheet. Next one is quoted value, that is market value of shares. Next is fair market value, which is the average of values calculated on intrinsic value or yield value. Next one is intrinsic value, value of shares based on amount of net asset per share. And lastly, yield value, which represents capitalized value of profits. Next one is methods for valuation. Majorly 3 methods are there. First one is intrinsic value method, market value method, and lastly fair value. Intrinsic value method is also known as asset backing method, asset basis method, real value basis method, and lastly breakup value method. Second method, that is market value method, is also known as yield basis method and earning capacity valuation method. And lastly, fair value method is also known as dual method. Thank you so much, and in the next lecture we will understand all the 3 methods with some illustrations.